Welcome to GP Bullhound's Tech Thoughts, a weekly overview of economic developments in international markets. Hello and welcome to GP Bullhound's Tech Thoughts. Today's the 9th of December and we are here with Jenny Hardy and Nejla-Selma for our weekly market roundup. Today, the team will cover TSMC's Arizona event and what it means for semis, Taiwanese November sales numbers, and company results. Over to them.
Thanks, Maria. This is Jenny Hardy, Portfolio Manager at GP Bullhound.
Hi, everyone. My name is Nejla, and I'm an analyst here at GP Bullhound. And going over to the market, Jenny, it still seems like tech is in a period of volatility. What do you make of it?
Yeah, no, it definitely does still seem like we're in quite a fragile state. And I think over the past sort of week or so, we've seen good macro news coming out of the US. So the jobs number last Friday, the ISM data at the start of this week. And broadly, the market is reading that as a sort of hawkish Fed continuing, and stocks, especially tech, really reacting badly to the likelihood of higher rates, I think. And then in China, we still clearly have sort of uncertainty around the path out of the sort of zero COVID policy, and that still seems quite uncertain. So, yeah, certainly still quite a volatile period for tech, I think.
Yeah. And moving on to the news for the week, I think the big news of the week was really that TSMC were out in the US announcing a new fabric, which will begin 3nm process technology in 2026. What do you think that means for semis?
Yeah, I think we've been sort of mulling it over a bit as a team in terms of what this very big announcement means for semis going forwards. And I mean, I think firstly it's worth noting it was a very big announcement with lots and lots of sort of pomp and ceremony attached to it. Lots of US and indeed global CEOs flying into Arizona to speak, mostly in front of lots of American flags, and it was certainly a very big event, and I think broadly for us, it seems to be more about politics than it is necessarily about a meaningful shift in the sort of semi-manufacturing landscape. So I think if we just sort of step back and look at what this is really announcing, so now TSMC will spend $40 billion building two fabs in Arizona. If you look at the sort of wafer output that they're targeting with those, it's still a very small proportion of their overall output. So really still Taiwan is absolutely the sort of bulk of TSMC's manufacturing base. So the US will only end up being sort of 4% of its output. And then if you look at how advanced these semiconductors coming out of these fabs will be, they will still be sort of 4 years behind where the Taiwan manufacturing is in terms of the sort of advancement of technology. And I think for us, you know, it's very clear that the US is just a more costly region to manufacture semis. So broadly, it's sort of 30 to 40% more costly than Taiwan, and you know, so broadly it makes very little sense for TSMC to be doing this, except clearly that it is getting subsidies from the US that make it a bit more kind of economically viable, but still, for us, this is more about kind of keeping its customers happy. Clearly, its main customer is Apple. It allows Apple to come out and say that it is taking chips that are made in America, which, again, it is good for all the sort of politics around technology. But I think for us, more about politics, and worth noting as well that it's clearly positive in the short term for our semi-cap equipment names who are already seeing an impact in the order book from some of these kind of tech sovereignty manufacturing projects. So absolutely good for the semi-cap equipment stocks that we own. More broadly, I don't think right now it represents any material shift in the sort of status quo of semi-manufacturing.
And if we're just staying on this kind of semis path, we had some Taiwan monthly sales data coming out. I think Hon Hai was the one we were waiting for. Its November sales were down 29% month on month. Seems like they still are impacted by China shutdowns. But then, I mean, they didn't cut the December quarter guide. What do you think that tells us?
Yeah, so yeah, you're absolutely right that Hon Hai was sort of the number that we were quite curious about last week, because we've obviously seen on the news the impacts around the COVID shutdowns and some of the protests around the Hon Hai factory that's assembling the bulk of the iPhone products. And I think the November number was absolutely weak. So yeah, you're down 29% month on month. Looks weak to us. I think the fact that they've not cut the sort of quarter guide shows that they've been able, or they think they're going to be able to shift some of that production and reallocate some of that production as well. So certainly weak, but I would say kind of they're still being able to manage that. And then this morning, the big number that we had out was TSMC reporting its November sales numbers. I thought this was very strong. It was up 6% month on month from a very strong October number, up 50% year on year. And if we look at what December needs to be in order to reach the sort of Q4 consensus number of slightly up sequentially, it really looks like, it looks like those numbers could well go up. So if we look at the usual seasonality, it's normally down a little bit month on month. December is. Actually, we have an extra week of December manufacturing this year. So for us, it looks like it will be a pretty good Q4 number. So that was certainly positive this morning. And yeah, we had a few more out over the week. Perhaps the one to call out is Delta, which is one of Infineon's customers, and still showing sort of 30% year-on-year growth. So autos still really showing strength from a semiconductor perspective, and that was a message that was reflected in some of the meetings that we had with companies this week, and on the semi side, it's still very clear that autos is absolutely the area that's still showing strength.
And if we're just finishing with some software reporting, I think it was a bit of a story of margins winning through. What's the broad takes from that?
Yeah, I think broadly this week, software has absolutely sort of shown strength, and I think there's been clearly a degree of caution around some of the spending trends, but actually, the numbers out this week were, I would say broadly good. So MongoDB reported stronger growth, particularly within its Atlas cloud business, and absolutely sort of showing signs of operating leverage. And then in the DevOps space as well, sort of Sumo Logic beat and raised, GitLab too, showing very, very strong revenue growth. So yeah, I would say broadly this week's software reporting was pretty strong.
All right. So thank you all for listening and see you next week.
Thank you.